Welcome to the Explainer. You know, when you think about your favorite sports team, you probably think about the players, the grass, the goals, the romance of the game. But today, we're stripping all of that away. We're going to look at the world's most successful football club exactly like it's a Fortune 500 company. We're diving deep into the corporate playbook of Real Madrid to really understand the intricate financial engine that drives their absolute dominance, both on and, crucially, off the pitch.
Okay, let's start with this staggering number right here, $7.7 billion. I mean, to put that into perspective, that's a higher valuation than a lot of household name tech companies. According to the latest rankings by Sportico, this figure absolutely cements Real Madrid as the single most valuable football club on the planet. And what's really fascinating here, they're pulling this off while operating under a completely different structural reality than almost all of their heavily backed competitors.
So here is our roadmap for today's Explainer. 1. The billion-euro football club. 2. Breaking down the revenue. 3. The stadium economics. 4. The private equity threat. And finally, number 5, evolving the ownership model. Let's dive right in. Section 1. The billion-euro football club. Now, check out this widening revenue gap from the latest Deloitte Football Money League. Real Madrid didn't just casually cross the 1.16 billion euro mark. They essentially built a nearly 200 million euro moat between themselves and second-place FC Barcelona. Honestly, they are functionally playing in a league of their own financially. They've completely separated themselves from the rest of the market. Moving on to Section 2, breaking down the revenue. Because, you don't just make €1 billion by selling tickets on a Sunday afternoon. Take a look at that massive commercial slice. 594 million euros. That is a 23% jump year over year. If you took just Real Madrid's commercial revenue all by itself, it would rank in the top 10 of global football clubs' total revenues. By pushing their commercial share this high, they've basically decoupled their financial survival from what actually happens on the grass. Win or lose, they are monetizing a massive global brand. I mean, their shirt alone is practically a walking billboard worth 300 million euros every single season. With giants like Adidas, Fly Emirates, and HP on board, they've secured this incredible corporate income stream. But honestly, the real secret sauce here isn't just the sheer dollar amount. It's the timeline. By locking these deals in all the way until 2031, Real Madrid gets something that is incredibly rare in the sports world: absolute financial predictability, in an industry that is notorious for being entirely unpredictable. Section 3. The stadium economics. So matchday growth, it's no longer just cyclical. It doesn't just spike when the team is winning anymore. It has become deeply, deeply structural. Real Madrid poured over $1.2 billion into redeveloping the legendary Santiago Bernabéu. They drastically expanded the premium seating, built massive hospitality suites, integrated all this retail, but more importantly, they transformed the stadium into a massive multi-purpose arena. We're talking a venue capable of hosting everything from NFL games to Taylor Swift concerts. And that transformation drove their matchday revenues to a staggering 233 million euros, which is actually the second highest ever recorded in the money league. This whole strategy really reflects a massive paradigm shift in the industry. As Tim Bridge from Deloitte puts it, there's a pivotal shift happening. It's all about maximizing the stadium asset to create a year-round entertainment destination. Elite clubs are securing their financial futures way beyond the traditional 90-minute match. They're building this on-site ecosystem of revenue streams that makes them basically immune to short-term sporting slumps. Section 4. The private equity threat. And this brings us to the ultimate multi-billion-dollar question at the heart of modern sports. How exactly does a legacy, non-profit, fan-owned club survive against the seemingly endless wallets of private equity and sovereign wealth funds? It is literally the ultimate David versus Goliath story. Well, except David is worth $7.7 billion in this scenario. On one side, you've got Real Madrid's romantic, traditional socio-structure, over 100,000 members, strictly nonprofit, and absolutely no majority shareholder calling the shots. On the flip side, you have the clinical, highly scalable platform of Manchester City and the City Football Group, a ruthless, multi-club tech and media conglomerate completely backed by Abu Dhabi Capital and the private equity giant Silver Lake. Think about this from an investor's perspective for a second. Private equity absolutely loves this multi-club platform because it scales kind of like a software company. It allows for shared global scouting and cutting-edge data analytics across 10 or more different clubs. It centralizes commercial operations, which drastically slashes overhead costs, and it creates this seamless global pipeline for talent.
Powered by private equity growth capital, this multi-club model is spreading like wildfire across European football. So, Section 5, Evolving the Ownership Model. To combat this highly capitalized threat, Chairman Florentino Perez is proposing a radical defensive maneuver. He's exploring a plan to basically distribute over 10 billion euros in club assets among its 100,000 members, making them the quote-unquote true owners. He's effectively trying to modernize a nonprofit structure so it can wield the financial weight of a modern, heavy-hitting corporation. It officially opens the door for individual members to hold real, tangible value in the club. This evolution is an absolute masterclass in walking a tightrope. Back in 2024, they actually straight up rejected a massive 1.99 billion euro private equity deal from CVC, mostly to rigorously protect their long-term media rights. But now, looking ahead to 2025 and 2026, they're reportedly exploring a highly targeted 5% minority stake sale to help fund global digital and real estate growth. They are trying to thread the needle here, capturing the financial firepower of Wall Street without actually losing the soul of the club. And honestly, that perfectly illustrates the core tension in global sports right now. As the gap between traditional heritage and multi-club billions continues to widen, you have to wonder, will the massive, ruthless scale of private equity platforms eventually force everyone to play by a new set of rules? Real Madrid is betting $7.7 billion that tradition can still win out. The real question we have to ask ourselves is, are they the exception to the rule or simply the last of a dying breed? Thanks so much for joining me on this explainer. I hope you walk away with a much sharper view of the massive business hiding right behind the beautiful game.